In this episode of Smart Humans, we talk with Peter Grosskopf, who's the chairman of Argo Digital Gold. He talks to us about how he loves to put a majority of his investments into alternatives, including over 50% into precious metals, why he thinks gold and other hard assets are a great hedge against the inflation environment. He talks to us about the benefits of having gold or other hard assets. And of course, he gives us his predictions for 3 years out, and you don't want to miss these.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. I'm super excited for today's guest. We have a pioneer in the world of digital gold. So, Peter Grosskopf, welcome.
Thank you. Thanks for having me, Slava.
Yeah, so you're the chairman of Argo Digital Gold, and we're going to jump into that in just a little bit. But we always like starting all the way back. How did you even get into alternative investments at all? Where did this all start?
Well, I guess out of business school, I got hired by a bank. And before I even started that job, I decided I wasn't going to be able to handle the corporate culture and where I was posted. So I joined a firm as a derivatives, futures, and options trader when I was 21 years old. So I started.
What year is this?
1987. So
Nice.
I started when I was very young, and I started in the area of commodities, which was a very nascent area at that time. It was either physicals traders or it was people that were really bullish on whatever they were looking at, whether it be pork bellies or gold. These were committed traders.
Nice. And so give me some more of that evolution. So you start from 1987, you're a derivative trader. How do you evolve? What happens from there all the way to Argo?
So in Canada, the independent brokerage firms and derivatives and futures and options firms were acquired by the banks over time. So ironically, ended up working back at a bank. I then went to start an independent dealer called Newcrest Capital, which was an equities shop mostly. And I focused on banking, a lot of financings, covered a lot of different industries. And then we were ironically acquired by the bank again. So during that time, I started working with Eric Sprott, one of my great mentors. And Eric made a huge bet and a huge call on gold in the year 2000. And that got me back into the whole area of alternatives. Ended up heading up his firm, Sprott Asset Management, and built it from $6 billion under management to about 25 over a 12-year period.
And then was the next step to figure out Argo?
Well, during my time at Sprott, we were looking at all things gold. That was really our forte globally. And we founded the Sprott Physical Trusts, which were backed in physical gold. And we started looking at digital and the tokenization of gold probably about 5-6 years ago. And it became a passion project for me. So when I left Sprott, I continued with that project. And that's what brought about Argo.
Yeah, so I'm going to have to ask you what digitization of gold means in just a second,
Sure.
But we'll get there in just a few minutes.
No problem.
So obviously you're an accomplished business person. You have your own investments. We love to hear perspectives on the various types of asset classes. So what's your thoughts on the various alternative markets? So whether it's real estate and private credit in the yield world, or pre-IPO venture, crypto, and then things like art and collectibles. I know I just gave you 6 different things, but would love to hear how you actually invest some of your own net worth in terms of allocating across these. For example, how much of your investments go into these alternative type assets versus the typical stocks and bonds?
Yeah. Well, because I was a banker and an investment banker, I actually restricted myself on holding a lot of public investments. So I was always a heavy alternatives investor. The majority of my assets were in alternative assets right from the start.
Okay.
But I break it down into 2 different thoughts here. The first is, how do people that traditionally have needed more liquidity invest in an alternative strategy. And I think there's been so much work done on that. I call it the democratization of alternatives, things like private credit. You can hold BDCs now and do private credit very efficiently. And I think that's wonderful. And I do quite a bit of that. I do a lot of market neutral funds. I do a lot of private credit. And I think that those have become very efficient. And I'm grateful for that. As you know, the private markets are now bigger than the public markets. So it's good that individuals have the ability to access them. So I'd put that on one side of the equation. The other side is, how do you keep pace with inflation? And we all know inflation's running hotter than what the Federal Reserve says it is. And in order to efficiently and effectively beat inflation, you need to hold hard assets. Investors have traditionally done that through real estate, but are returning to more commodity and real asset investments, and in particular gold, to hold its purchasing power more than what fiat currency would. And it's pretty simple. Bitcoin and gold have exactly the same premise, which is it's harder to print, it's not controlled by a government who's intent on printing, and therefore it does better than inflation, and it's a safer place to store some of your value. And I think that's become the number one investing theme for the public now. I think it's insurance against governments.
Nice. So for you personally, of your 100% of net worth that's not your primary home, if you had to guess, how much is in alternatives?
Well, first of all, at least 50% is in precious metals. So I'm a
Wow,
bit off the right side of the curve.
I love it.
And I would say that I'm probably 80, 90% alternatives.
Wow, that's amazing.
Mm-hmm.
So when you say precious metals, obviously gold is the easy one to understand, but what else would you include in your personal portfolio for precious metals?
Well, gold, silver. Gold's more liquid than silver, a much larger market. But I also look at specialty minerals, and I have the advantage of working with a team in Canada and the UK that covers the metals universe globally. So I've always been about mining and metals. You need a team of experts. You need to know, whether uranium or whether copper is the right one to move next. And it's a little more active than my holdings in gold would be. I also invest in energy and energy related resources because they are scarce. I think the energy markets are a little more correlated to the economy. So that's the downside.
Got it. And then art or collectibles, is that something you invest in or not really?
Art for my own personal reasons and not large, and collectibles, no, I've just never had the expertise to go into them.
Sure. And we can't be good at everything, right? How about pre-IPO venture? So whether it's early stage or late stage pre-IPO stuff.
Yeah, I've become a bit of an entrepreneur. So usually the best ideas are pre-IPO. And I have a group of colleagues that I invest with that look at those types of deals. So pre-IPO for sure.
And then crypto, obviously there's a connection between gold and Bitcoin, but are you actively investing personally into BTC or other crypto investments?
So it's a very good question. When we were at Sprott, we decided not to go into Bitcoin. It was obviously a mistake. It's, in my opinion, become completely legitimized now as the volumes have grown, and it's become a real, call it anti-fiat currency market. So I'm very sorry that I never did, but now I've got the link between Bitcoin and gold for gold tokenization. The next thing we'll talk about, digital gold. I'm going to focus on that because I know that better. A lot of my team does invest in digital assets and Bitcoin, but I've never done so. I've always stuck with gold.
So you mentioned hard assets. So beyond your primary home, are you a real estate investor?
I have some properties, some rental properties. I keep it very light. I'm not an expert. My son's in the business. He's an expert. I would rather leave my money with my son to invest than do it myself. I think the theme of all of that is go where you know and stick to what you know if you're going to do it yourself. And if it doesn't mean it's not a good idea if you don't know it, but leave it to a team of experts.
Go where you know. I love that. We're going to bring that back.
Okay.
So thank you for sharing all of that. I'm going to ask you a very high level question, which you could take wherever you want, which is, and I think I know a little bit where you'll talk about inflation, but what do you think of the market today? So whether it's the economy, the stock market, commodities, what do you think about labor? What do you think about international, Trump? Take it wherever you'd like. Let's hear, what Peter has to say about where we're at.
Sure. Well, certainly an interesting time financially speaking. I would say the number one noticeable aspect of the market right now is it's been fueled by the issuance of an unbelievable amount of debt. And that debt is mostly now sovereign. Companies are generally in good shape, although there's the over-levered side of the market, but let's leave that out. So the issue is that we've borrowed from the future to spend in the present. And at some point, there's going to be a day of reckoning. I believe it's already happening in that I think they've gone past the point where they can control the debt. Now they just need to work it like a clay pot. And the way for them to work it is to create a situation where inflation and the economy grows faster than the interest rate that they're prepared to pay on the risk-free. So I'm talking about financial repression, an era which I believe will last for 10 to 20 years of negative real interest rates. And for savers, that's very dangerous. And that has, in my opinion, fueled the desire to get into gold, which I think is very broad-based now. Gold is an entirely different market than it was even 10 years ago. And also Bitcoin. So you've now got a pretty heavy inflation protection market, which between gold, Bitcoin, and tips, treasury tips, is almost 10 trillion in size. But it's still a fraction of the 300 trillion in global debt balances that have been built up. So I still think we're in the early innings of having to get protected from fiat currency purchasing power declines. And most real assets, whether they be real estate, Bitcoin, gold, they all have a bid under them in that desire to protect. So I think that's the number one noticeable aspect of the market. You can play offense on stocks, private equity, private credit is even a form of offense in a way. But you need some defense, and people know that now. And so the great offense, of course, has been the big tech companies. I mean, if you haven't invested in those, you've completely lost out, and I haven't. So you might feel like you've missed it, and you probably have. But more people have started to put money into insurance products against that inflation, and that's what I notice.
So I'm just taking some notes here. You said 10 to 20 years for negative real interest rate returns for the savers. So just exactly what that means is if I'm putting my $100 of cash into the bank and I'm getting, let's call it an interest rate return, chances are I'm not getting enough compared to the inflation that's going up around me. So in the years that I'm saving, I'm probably actually losing my power for purchasing. Is that correct?
Exactly. So to put some real numbers on it, I think you can count on now somewhere between 3 and 5% interest rates as a saver, which is a little more normalized than it was. And they're telling you they're going to get inflation down to the 2 to 3% range, which A, I don't believe, B, I don't think they control, and C, I think it's a lie. I think they're very, very crafty in the way that they decide to calculate inflation. You know, it's kind of like asking an NFL referee whether they like the Chiefs or not. You know, like they seem to favor them no matter what. They don't really count it fairly, I don't think.
Got it. So, but just to be specific, if I was getting 4% interest and the inflation was really 2%, I would still be positive, right? Because I'd be making more money than the inflation was going up. But you're saying I might be getting 4% interest, but the inflation realistically is actually more like maybe 5%. So I'm actually losing every year. Is that right?
5 to 10, right?
Because I'm just using the math just so the listeners can understand.
Absolutely. Because it's not just cheap goods and services that need to be counted when you count inflation. Of course, it's rents. Of course, it's university tuition. Of course, it's medical. Of course, it's insurance. You're telling me inflation in the insurance market is 4% or 3%? That's a joke. It's going up 10 to 20% a year.
Right. So the 10 to 20 years, that's like a slow boil for the
Yeah,
frog. It's hard to notice
exactly.
that, which is scary. But what do you think about the economy in the next 2 to 3 years? Anything that you predict as to what's going to happen in the near term?
Well, here's my prediction, and it's not very accurate, I don't think. And that is that everything's been going perfectly for a long time. And if you listen to Donald Trump and his election platform, America is going to be great, damn it, because I'm going to make it great.
Right.
And it's got a lot of momentum, right? It's never been stronger. The economy has never been more finely tuned to American industry and American companies. The problem is the dollar's too strong and it's starting to hurt the rest of the world. The problem is tariffs are coming in now. The problem is de-internationalization is happening in a real way. So there's all these headwinds now, but the market has stayed strong and high, and employment has stayed strong and high. And it's kind of like, are we really playing the last game of cards on the Titanic or not? Like, when does this thing start to slow down? And I think it's starting to slow from what I can see. The statistics I'm seeing are that levered consumers are starting to slow down now. And of course, a lot of government employees are being laid off. That's going to create economic weakness. So I think at some point soon, we're going to see the weakness. And I think you're going to see interest rates getting cut again. They'll try and juice the markets. That only has limited effect now. And I think this whole sort of monetary policy thing has been played out for so long. I just don't think they're going to be able to stop the economy from slowing.
Okay, perfect transition. So, what is Argo Digital Gold and why did you start it?
Now let's talk about something I actually know about. So, digital gold can be a bunch of different things. It can be fractional gold that you, an everyday consumer, or a bigger institution can buy via the internet. So you've secured gold in storage. You've done so using a digital contract, and we call it digital fractional. That's been around for 20 years. It's getting better. It's getting more efficient. It's getting more slick. And I would say that's a business unto itself. And there's a bunch of competitors in that. What's new is that digitization is represented by tokenization. And there are gold tokens. They do work. They do represent physical gold. And I want to be very careful about this. All of this is talking about physical gold in storage. It's not a paper. It's not a contract. It's you're backed by physical gold one for one. So tokenization, if done properly, is representing physical gold bars in storage that have been put on the blockchain and can be traded. And I believe it will be the most revolutionary change that we've seen in the gold markets since the advent of ETFs. And it's coming. And it's taking a long time, and people in the gold market are tired of waiting for it. But it's coming, and it will result in products that make gold much more accessible, like Bitcoin, like
So,
other products, financial products.
let's use me as the customer. So just so I understand in terms of size, do I need to be a retail investor, an accredited investor, an institution to work with you? What is it? Anything?
Any of the above. So it's a completely democratized model
Okay,
where,
great.
yeah,
And I could go onto your site and go purchase it now. Is that right?
that's right. You could purchase any denomination that would meet the minimum.
What's the minimum?
I believe it's like $25 for us. It's very
Okay,
small.
great. So what's the difference between getting $25 of Argo Digital Gold and $25 of a gold ETF?
So a gold ETF is a security. And as such, you need to purchase it through a broker.
Right.
So for starters, the regulatory framework is different. It does trade on exchange, meaning it has limited exchange hours that it trades. It has 2-day settlement.
Meaning the ETF.
Yes, it has 2-day settlement. And for large traders, that's very efficient. The big hedge funds, institutions, they can wheel in and out of that ETF. They don't pay many custody fees. They don't pay brokerage fees on top of that, or not large ones anyway. For an everyday investor, you're paying the ETF fee, which eats away at your gold holding every year. That's about 50 to 60 basis points. On top of that, you're paying a broker to trade it. On top of that, you're paying a broker to house it. On top of that, you're paying a custodian. So for an average investor, it's somewhere between 100 and 150 basis points of what we call grind a year. And there's nothing wrong with it. I think that many, many years ago, when we started the Sprott physicals, there was a concern that the GLD did not have the physical gold in storage. I don't think that's a real concern anymore. So do they get audited? Do people go and look at the bars? I think they do.
And what's the grind or the fees with Argo?
So it depends on size.
So let's say I did 10 grand.
Yeah. So I'm going to generalize now. I don't want to quote without our team being on the phone, but the first thing is the trading fee. And we pledge to do that as low as possible. We pledge to undercut the competition if we can. And I'm not sure what that would be. It would depend on the day. It would depend on exactly when you bought the gold and exactly when we delivered it. But we're trying to cut that to the bone, the trading fee. The second thing would be the annual storage fee. And depending on the size of the investor, we're anywhere between, and I'm going to generalize here, 20 basis points a year to 50 basis points a year. We will be able to, in certain cases, store gold for free.
How would that be?
Well, we would pay the fee and we would make it up on the trading.
Got it.
So we've got a model which will change. And the pledge that we have is we're getting investors in as low and lower than the competition, as low as we possibly can.
When did Argo get started?
Well, it's just launching in the US now. In fact, I think the official launch date was like this week. So yeah.
Here we are. We're going to have breaking news. I love it.
Yeah.
Amazing. So if it's 100 to 150 basis points for the ETF style and you're 20 to 50, so it's a dramatic, let's call it 1/3 the price. I mean, I'm simplifying here dramatically.
It can be, yeah.
Okay, that's awesome. And so you're already on the bleeding edge of as to really where all finance is headed, right? Because what people have been saying
I believe so.
Really a home should be able to be, digitized and potentially fractionalized, be done on a token. Obviously, you already have NFTs, but even Apple stock, right? Apple stock should be able to similarly be done on a tokenization process and be fractional. But obviously, the legacy markets haven't really gone there yet. But you're already on the bleeding edge doing this with gold, kind of pioneering it forward. Is that fair?
That's right. And so the next stage, and the one we've been talking about fractional gold, representative of physical gold and storage. Once gold is tokenized, it really opens up a whole new, use of applications. First of all, settlement can be instantaneous. Secondly, it's 24/7 trading. Thirdly, all of a sudden, gold can be sent between parties, assuming that the right regs are in place and you're dealing with a money transfer organization. It can be sent between parties, which are anonymous to each other, and it can be used to pay for things. And, think of it as once that happens as being a lower volatility Bitcoin. And so the gold market is much bigger than Bitcoin. It trades much more. It's more liquid. But the two could become partners in crime, so to speak. And that's a bad use of a word, but they could become real, true alternative currencies. And that's what we're talking about, alternative currencies.
Right. So if there's a listener who's wondering to themselves like, oh, why do I really need to be thinking about this? Because maybe they are thinking about gold. So it's not a question, do I want to get exposure to gold? It's a given. They want some exposure to gold. Now, how do I get that exposure? Really, the difference here is you're talking about having lower fees, faster settlement, and being able to do it outside some limitations of which brokerage account you connect to. Is that fair?
Yes, that's right. And in the gold world, we're an expert. In the gold world, we face the vaults. In a gold world, we can tell people that if we're covering a gold token, that we think it's legitimate, and we're there to be the experts on digital and tokenized gold.
So I know we've just been talking about this for a few minutes already, but I'm going to ask one more time. So I have, let's call it a Robinhood account. I'm one of the listeners. I have Robin. I'm trying to make up a scenario, and I have $100,000 in my Robinhood account of various stocks, maybe some ETFs that I've had. Maybe I'm doing a little bit of options trading. I have no idea, and I'm interested in getting some gold exposure. You're suggesting I should open up an Argo account outside of Robinhood instead of getting that GLD and go with you guys. Is that right?
Actually, our business model would be you could do that. You could set up directly with us. Of course, we're always happy to have the customer directly. That's our business model. But if it becomes a very popular service, we would consider doing a deal with Robinhood to do a pairs, exposure trade into Argo Digital Gold. So we're trying to set up those relationships where we co-act with other crypto and other brokers to offer our API, so to speak, which is a kind of a code word for our technology. We can offer that to them on a swap basis. So hopefully we can do business through Robinhood as well.
Amazing. But when the listeners hear this very soon, they're probably gonna have to open up an account directly until at that point in the future where
That's
there's
right.
a partnership.
Yeah.
Okay,
So for right now, you need to come direct to us.
great. And it's 24/7, which is actually awesome because
Yeah.
obviously the public markets have their limitations. Amazing. Anything else you want to mention about Argo Digital Gold?
No, I'm really excited. We just want to tell people you can trust us. We think it's a great idea, and we do think it's the right thing to put more than 10% of your money in alternative currencies. We really believe that you need protection against fiat, this constant printing, this huge debt load.
More than 10%. Wow. So is more than
Oh,
10% 30% or is more than 10% 12%?
well, look, 20 years ago, very few investors had any gold or Bitcoin exposure. I think you might be getting up to that 2 to 3% level now. Certainly more than that. And I would say, I personally don't feel comfortable unless, and I'm a Canadian. You watch the Canadian dollar versus the US. I made a huge mistake not having 80% of my money in gold or Bitcoin. I think that most people should consider 10 to 15 to kind of be a household average.
So you keep on saying gold or Bitcoin. So I just want to make sure I'm understanding clear. Do you think gold and Bitcoin are kind of swappable, like they're replaceable, or are there distinct differences in your mind?
Well, there's distinct differences, but I do think they aim to accomplish the same thing. So I think more and more investors will consider them both.
I see. Okay, great. So you're obviously so knowledgeable going back all the way to 1987 with your long tenure. What is it that you're using to read, to watch, to listen to be
Mhm.
Peter, and to be so smart about the
Uh,
commodities and gold and precious metal space?
well, I do a lot of reading. I read a service called Forest Through the Trees. I read a service from Grant Williams called Things That Make You Go Hum. These are writers. Luke Gorman covers international money flows and what's actually happening with the world's money. And Grant Williams is just a great commentator on the overall financial markets. I read Jim Grant's Interest Rate Observer for bonds. I read a lot of publications.
That's great. These are awesome suggestions.
Yeah.
And then any like hobbies or habits that make you you?
I like to be active. Every day I like to do something. It can be surfing. I'm down in Costa Rica now. It can be skiing. It can be just working out. Just every day, burn some calories, get some mobility, get your head out of the screen, and get out and enjoy the outdoors.
Perfect. Get the blood flowing. All right. Well,
Yeah.
we always like to put our guests on the spot with some predictions for 3 years out. We call it, 3 years out. And we like to have one prediction for the public markets where you give us an actual ticker at a company and one prediction for the private markets. And I know pretty confidently that yours is gold, digital gold, and potentially Bitcoin. But I'll let you choose whatever you want. So, what would be your two predictions? First, the public markets.
Public markets. Boy, I don't trade a lot of stocks. So I would say that, look, I think that, I think GLD, okay, gold, I'm going to come back to gold. I'm only going to make one prediction. I'm going to say gold's going to be 4,000 in 3 years. And
Okay.
you can play it through the public markets, or you can play it through Argo.
Um, Fair enough, but I'm going to put you on a spot. I'm going to take that as your private markets.
All
So
right.
what would be your public markets, i.e., more of like a company or
All right. I'm going to throw it out there. I like Elon Musk. Okay. I think he's half crazy, but he has developed more value for this world than, a couple of countries put together. I'm going to say that Tesla is going to get cut in half.
Oh wow! So your prediction is a down. I love it. I love it. Usually it's an up, but this is a
No,
bold prediction.
sorry, everybody, but Tesla cannot keep making cars and generating earnings and being worth over $1 trillion in an industry that is absolutely getting gutted right now. It ain't going to happen. It's getting cut in half.
Okay, this is amazing. I love the bold prediction. So your prediction is Tesla 3 years out will be down, but you're even saying cut in half.
Yeah.
And the obvious reasons is
Sorry, Elon.
the multiples are just too high. The industry is just too margin compression. You're just not believing in all the future in terms of the innovation that will actually allow for this type of price.
Yeah. I have a battery car. I see what happens when the battery fails. People aren't ready for that. Nobody's going to rent them. It's got a limited application to the automotive market, and I think it's been way overhyped.
Oh, I love it.
And
I love
yeah.
it. You went from no prediction to an amazingly bold prediction. This is awesome. And then
What do
gold.
I
No,
know?
this is great. And then gold, your prediction was 4,000 when? Sorry, I didn't quite hear that.
Within 3 years, for sure.
Okay, great.
And I think that's being relatively conservative. No huge blow off moment. I think that's just going to happen.
And just to timestamp it, what is it today directionally?
Well, gold's hitting new highs now. I've actually been like blown away by how well it's acting. It's what is it, 2880 today?
Okay. So, I mean, for an asset that's quite stable, 3 years out, that's pretty significant growth.
Oh yeah, I think because it's just a question of, even as a, call it $3-4 trillion investable market, the average investor still has no exposure to gold.
Nice.
And I would say, even if you include institutions and hedge funds, you're probably under 2%. Imagine if that goes to 6. I mean, the gold market's going to get squeezed, even for how big it is.
So you think the opportunities, there's just more demand that's coming?
Oh yeah.
All right, perfect.
Investor demand. Yeah.
Well, Peter, this has been an amazing conversation. We've covered a lot of ground, from you becoming a derivatives trader in 1987, and that started your whole point of view here, and obviously got into the gold world in 2000 and beyond. You really feel that to beat inflation, you got to get into some hard assets. You personally do what you say here, which is over 50% of your net worth is in precious metals, which is amazing. Yeah. And even higher across all the alternative assets. It's not just gold. There's silver, uranium, copper, etc., energy, but energy, you think, is a little closer connected to the economy. You like to stick with what you know, go where you know, which I think was a great takeaway. Big prediction about, we're going to have 10 to 20 years of negative real interest rates. So people need to think about their insurance against that and try to find the right way to do that. Inflation is looking rough. Is it really just 2% like they say, or 3%, or is it really more like 5 to 10%? So are we really hearing the exact facts, or is it going to be the slow boil in the future where we get caught off sides? And you do think that soon we'll be starting to see some weakness, which is obviously why you have your platform, which is Argo Digital Gold. The fractionalization of gold has been around for 20 years, but now you're taking it on chain with tokenization, which is amazing. And that really creates a lot of benefits, from lower fees, which you call grind, faster settlement, anonymous transfers, not having to be stuck to a specific brokerage account, which is all very cool. Right now, you have to get direct, but soon there'll be opportunities to do partnerships. And of course, you gave us lots of suggestions as to what to read, which, people will have to listen to that and choose which ones they want to follow up on. And you had your 2 huge predictions. 1, Tesla's getting cut in half, and 2, gold is going up to 4,000. Thank you very much, Peter.
All right. Thank you.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.